On this episode, we want to talk about how to get an SBA loan. So what is an SBA loan? An SBA loan is basically a business loan. It could be for the acquisition of a business with real estate or without real estate. And basically, almost every business is eligible for SBA financing. There's certain industries that are not eligible, but for the most part, most businesses are eligible for SBA financing. So you can use SBA financing to start a business, to acquire an existing business. You can use the financing as well to buy a franchise startup or to buy an existing franchise business. You can use SBA financing to buy a building that you're going to move in and occupy at least 51% of the space. You can use the financing to build a building that you're going to occupy at least 60% of the space from the start, and within the first few years, you're going to occupy 80% is the new for ground up construction. So obviously, there's a lot of use cases for SBA financing. So who makes SBA loans? Well, SBA doesn't make the loans. Banks, credit unions, and non-bank SBA lenders make the loans. And there's what we call PLP lenders. PLP lenders are lenders that can underwrite and fund the loans in-house, and they don't have to send it into SBA for underwriting. They are delegated to underwrite in-house. Some SBA banks, lenders are not PLPs, so they send everything in non-delegated to SBA for underwriting. So you can have a total loan amount of up to $5 million per business. Sometimes if it's a bigger business acquisition, let's say it was an $8 or $9 million acquisition, you can do SBA 7A loan with a pari passu with a conventional loan, so you can get a little bit larger. It's an SBA loan and a conventional loan together. So there's many uses to use SBA financing. Really what you need on your side is a resume from you, a couple SBA forms such as the Form 413, which is an SBA personal financial statement, your financials for the past 3 years, a business plan, and then if you're doing a business acquisition, we'd need 3 years of financials from the seller, from the business. If there's real estate involved, there's appraisals and phase 1 environmentals. So here's the real thing, is that the SBA puts out an SOP, which is basically the policies and procedures, and basically the guidance around making these SBA loans. So the SBA actually guarantees a portion of the loan based upon the loan amount. It varies on the size of the loan. Not all banks are created equal. So my suggestion is always work with an SBA loan broker, whether it's me or somebody else, somebody that really understands the industry and can help you navigate and get you to the right lending institution. Because you can literally take a deal to one bank and they decline it. You can take that same deal to another bank and they fund 90% loan to cost. So on a business startup, business acquisition, we'll start there. Typically, if the cash flow for the business is strong and can support the debt service of the new SBA loan, then you can get up to 90% financing. You can also have the seller carry back a portion of your down payment. We call that on full standby. So you can limit your down payment. In theory, the seller could hold that full 10% equity that you need as a down payment on full standby, and you could fund this deal essentially with none of your own money. Most banks want to see some skin in the game. So what's more common is we see the seller carry back 5% on full standby, and then you, the borrower, would come in with 5%, or your investor partner. You can have partners that come in that own less than 20% that don't need to be guarantors. SBA loans are all recourse, meaning that you're going to sign a personal guarantee if you own 20% or more of the business. So like my philosophy, my strategy here is you should talk to an SBA loan broker, have him or her size up the loan and figure out who might be the best option. Some banks like hospitality, some banks don't. Some banks don't mind if there's a lot of airball in the deal. They call them airball deals when there's no collateral. And keep in mind, if the loan amount is over $500,000 per SBA guidelines, they'll look for additional collateral. So you got to keep these all in mind. So when they say additional collateral, your loan amount's over $500,000, you own a primary residence, they would look to put a second lien on that property, or first lien if there's no lien on it. Now, if you don't have any other collateral, that's fine too. Banks can still approve the deal. Not all banks will, but some will. Some banks are notorious for doing giant airball deals where there's no collateral, as long as the business that you're buying has really good financial history. There's a lot of tricks and tips to navigate the SBA process. There's a lot of good banks, there's a lot of bad banks, there's good banks for certain cases, and just being able to navigate and figure out what bank would be best suited for the particular loan request is really what I do. Putting together projections is fairly simple, it's straightforward. A business plan doesn't need to be elaborate. We've done other videos on that here. It's really just telling the story. Now, keep in mind, if you're doing a startup non-franchise, your business plan needs to be more solid because startups are riskier ventures. So you want to spend more time on the startups to make sure that business plan is addressing all the key points. Because remember, some underwriter is going to look at this deal, not know anything about you, and have to make some sort of determination. So the better you can articulate the game plan, the better for you and the success rate. And a good SBA loan advisor is going to help you make sure you put together a detailed business plan that will hopefully get your deal approved. They're also looking at compensating factors. So if the deal's a little weak, are you really strong? Do you have great credit? Do you have a lot of assets? Do you have a good net worth? Those deals are a lot smoother to get through. Or are you weak borrower, but the deal's strong? We can still navigate, right? And so there's always different uses and scenarios. So there's no kind of straight answer. When somebody brings me a deal and calls and books an appointment, it's really, we go over the deal, and usually by the end of the conversation, I have a pretty good idea who's going to be the best lender for this project. It takes a lot of legwork to figure out on some trickier deals. Like, for example, we just did a laundromat startup that was non-franchised. The gentleman him and his wife did not own any other additional collateral. The loan amount was over $1 million. We can get them done. There's just strategic ways of doing it. So if you're interested in pursuing SBA financing, to buy a business, to start a business, to buy a franchise, feel free to book a discovery call with me. Go to bookwithbo.com and we can talk about your scenario, and I can point you in the right direction, whether you just want some basic information to get started, or if you already have a deal and you're having trouble getting it through with some banks. So I see it day in and day out. You take it to a bank, they decline it, you're stuck. Let me help you be a solution. Go to bookwithbo.com. Anyways, thanks for your time. I'll see you on the next episode. If you're looking to acquire a business, stop scrolling on Biz Buy Sell and visit franchiseresellelistings.com. We'll do a customized search. You can get on our weekly distribution where we're sending new inventory weekly to your inbox. So visit franchiseresellelistings.com and opt in today. See you there. Hey guys, Bo Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.